Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Now with that disclaimer out of our way, let's get started. In today's video, I'm going to talk about 5 power sector penny stocks to watch out for in 2025. India's electricity sector is heating up, both literally and financially. With record-breaking temperatures and an electrification wave sweeping across homes, businesses, and vehicles, power consumption is soaring. The country witnessed one of the sharpest spikes in peak power demand in 2024. And this momentum is set to continue well into 2025 and beyond. Opportunities are emerging across conventional power generation, transmission infrastructure, and renewables, shifting the focus from managing shortages to preparing for long-term growth. Rising temperatures drive cooling needs, and investors are eyeing this demand boom. Here are 5 power sector penny stocks to keep an eye on in FY25. Leading the list is NHPC. Currently trading at around 84 rupees, NHPC is a power sector penny stock specializing in hydropower. A mini Ratna Category 1 public sector undertaking, NHPC is the Government of India's premier hydroelectric generation company. It primarily focuses on generating and selling bulk power to various utilities while also providing project management, construction contracts, consultancy services, and power trading. As of FY25, NHPC contributes around 15% of India's installed hydroelectric capacity with 6,971 megawatt out of total 46,928 megawatt. The company recently unveiled ambitious plans to invest around 840 billion rupees to develop 20 gigawatt of pumped storage capacity. This project, with an overall capex of 1.2 trillion rupees, will be executed mainly through joint ventures, signaling a major push towards expanding NHPC's renewable energy footprint and strengthening the national grid. On the financial front, NHPC reported an 11% year-on-year growth in revenue to 22.9 billion in the December 2024 quarter. However, net profit declined sharply by 47% from 6.2 billion rupees to 3.3 billion rupees during the same period. Looking ahead, NHPC is targeting a total installed capacity of over 23 gigawatt by 2032 and more than 50 gigawatt by 2047, up from the current 7,233 megawatt spread across 28 power stations. Next on the list is Satluj Jal Vidyut Nigam, that is SJVN. Currently trading at around 92 rupees, SJVN is a key player in India's renewable energy landscape. While hydropower remains its core focus, the company has diversified into solar and wind energy to align with global energy transition trends. It also offers consultancy services for hydropower projects. SJVN currently has an operational capacity of 1,972 megawatt in hydro and 254.5 megawatt in renewables, totaling 2.23 gigawatt. Recently, the company signed an MOU with the government of Bihar to develop 1,000 megawatt Hatidar Durgavati pumped storage project on the Durgavati River in the Kaimur district. In terms of financials, SJVN reported a 24% year-on-year rise in revenue from 5.4 billion rupees to 6.7 billion rupees in the December 2024 quarter. Net profit also rose 7% to 1.5 billion rupees from 1.4 billion rupees in the same period. Looking forward, SJVN plans to install 12 gigawatt of capacity over the next 2 years, aiming for 25 gigawatt by 2030 and 50 gigawatt by 2040. It also targets an annual renewable energy addition of 1 to 1.5 gigawatt, with plans to venture into new areas like round-the-clock power, green hydrogen, and green ammonia. Third on the list is Ratan India Power. Currently trading at 10 rupees, Ratan India Power Limited ranks among India's largest private power generation companies with a total installed thermal capacity of 2,700 megawatt, to 1,350 megawatt each at its Amravati and Nashik plants in Maharashtra. The company supplies 1,200 megawatts to the Maharashtra State Electricity Distribution Company Limited through a long-term power purchase agreement, ensuring stable cash flows. The balance power is sold on the open market, contributing to additional revenues. In the December 2024 quarter, Ratan India Power reported a 9.1% year-on-year decline in revenue to 7.3 billion rupees, down from 8.1 billion rupees a year earlier. However, the company made a remarkable turnaround on the profitability front, posting a net profit of 43.3 million rupees compared to a massive loss of 5.9 billion rupees in the same quarter last year. Looking ahead, Ratan India Power is working on expanding its presence in the renewable energy space, signaling a strategic shift towards cleaner and more sustainable power generation. Next on the list is Jaiprakash Power Ventures. Currently trading at around 14 rupees, the company was incorporated in 1994 and is part of one of India's prominent infrastructure conglomerates. It also holds the distinction of operating the world's largest privately owned hydropower project with an installed capacity of 1.32 million units, making it one of the leading independent power producers in the country. The company is involved in thermal and hydropower generation, coal mining, and cement grinding. Its diversified business interests span civil engineering, real estate, hospitality, fertilizers, healthcare, and education. It has executed 13 hydropower projects across 6 Indian states and Bhutan, contributing 10,290 megawatts to the power grid. Financially, the company saw a significant dip in revenue. Total income fell to 12.6 billion rupees in the December 2024 quarter, down from 22.1 billion rupees in the same period last year. Net profit also declined to 1.3 billion rupees from 1.7 billion rupees, mainly due to reduced income during the quarter. Looking ahead, Jaiprakash Power Ventures aims to enhance operational efficiency in order to reduce costs and improve overall profitability. Last on the list is Orient Green Power. Currently trading at around 12 rupees, Orient Green Power is a renewable energy company engaged in the development, ownership and operation of wind and biomass power projects. As per its annual report, the company's installed capacity stood at 402.3 megawatt as of 31st March 2024, with the majority coming from wind energy projects spread across various Indian states, along with a small operational facility in Croatia. In the December 2024 quarter, Orient Green Power reported a modest 1.5% year-on-year increase in revenue to 345 million rupees compared to 339.8 million rupees in the same period last year. However, the net loss widened to 240.2 million rupees from 210.7 million rupees a year ago. Looking ahead, the company has set an ambitious target of achieving 1 gigawatt of installed capacity over the next 2 to 3 years. This growth is expected to come from new solar and hybrid projects that combine both wind and solar energy technologies. According to a release issued by Weather Bureau on 28 February 2025, it expects above normal temperatures on most days this summer, except over northeast India, extreme North India, and southwestern and southern part of peninsular India. Against this, the Indian government is taking necessary steps to meet peak demand in the summer, as consumption is expected to rise owing to higher usage of air conditioners and coolers to counter the heat. They are expecting a peak demand of 270 gigawatt in the summer. All the preparations are in place to meet that demand. While this creates opportunities for power sector penny stocks, investors should approach them with caution. Penny stocks can be highly volatile, often facing challenges like regulatory hurdles, financial instability, and execution risks. To make informed decisions, it is crucial to assess the company's fundamentals, including its financial performance, corporate governance practices, and growth prospects, rather than relying solely on the allure of bonus shares and stock splits. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Sil from Equitymaster. Thanks for tuning in.